Index funds are one of the easiest yet most powerful investments you can have to build wealth passively, and is exactly why one of the best investors of all time, Warren Buffett, states by periodically investing in an index fund, the know-nothing investors can actually outperform most investment professionals. So Fidelity, Vanguard, and Charles Schwab are three of the old school brokerage firms that are among the largest in the industry that provide index funds to investors that you've probably heard or have even used some of their own. Which I'm going to go over some of the most popular ones that you could choose from, and at the end of the video, I'm going to go over some of the best ones to use and why. Now, index funds can come off as confusing because they actually can be bought as a mutual fund or an ETF. And if you don't understand the difference or you think I'm speaking another language, then let's first go over what exactly are index funds. So when you see the word fund, all that means is that you are investing into something that contains many different companies all within one purchase. And the reason for index being in the name is because when you invest into an index fund, you're getting many different companies within one purchase, but it's the fact that they all track an underlying index. An underlying index could be something like the S&P 500 index, which is something you probably heard of and consists of 500 of the largest publicly traded companies on US stock exchanges. And so in order to purchase the 500 companies at once, you would have to purchase a fund that tracks an index, for this case, the S&P 500 index. But where it might seem confusing is that the fund that is tracking the index that you are buying, it can be traded, you could purchase it as an ETF or a mutual fund, and that is an index ETF or an index mutual fund if you wanted to say. So to keep this as simple as possible, let's say that you want to buy the S&P 500 index. Well, you could do so using an ETF, and that through Vanguard would be the ticker VOO, or you could use Vanguard's S&P 500 Index Mutual Fund that has the ticker symbol of VFIAX. And although these do track the same index, so the performance from both are going to be relatively similar, there are a few things you need to be aware of. For example, with ETFs, you can purchase them on nearly any platform, whether that be Fidelity, Webull, M1 Finance, it doesn't matter. And if you've ever traded stocks before, ETFs can be bought and sold and they trade the exact same way as it would with an ordinary stock. Where with an index mutual fund, VFIAX on Vanguard, yes, it tracks the S&P 500, but you can only purchase it on Vanguard unless you do somewhere else, but you're going to have to pay a large fee. Another difference here is that with a mutual fund, they do not trade the exact same way as stocks and ETFs. They're actually different because when you buy or sell them, the trades don't go through until the end of the market day. And another reason why ETFs lately have actually been growing much more is because mutual funds are less tax efficient because you have less control over the taxes that are triggered. Because of this, my motto with mutual funds is first off index funds, but also to have it in a tax deferred account like a Roth IRA. And then for any regular taxable accounts, I would use ETFs. I've actually made a video relevant to this, I'll leave in the description below, but if you want me to make one specifically on the tax structure, I'd also consider doing that, so let me know in the comment section below. But besides the taxes, if the funds are tracking the same index, the results are going to be extremely similar, so I wouldn't worry about the actual performance. So hopefully that gave you a clear understanding between ETFs and mutual funds, because you're going to need to understand that going forward when I go over many of the options that these brokerage firms provide. So to get straight to it, let's first go over some of the most popular Fidelity index funds. Now, Fidelity has great index funds, but they are of the three brokerage firms, in my opinion, to be on the lower end when it comes to their ETFs. I'll cover a little bit more on that later in the video, but for me, I have a Fidelity Roth IRA where I use their index mutual funds, and I've been able to see great success with it, and I'm actually very happy with the product. I'll cover a bit on that throughout the video, but I've had a Roth IRA on Fidelity since I was 18, and I've been investing into their index mutual funds and have seen great success with it, and I'm definitely a fan of theirs. And I will note that with my Fidelity brokerage account, I actually invest into Vanguard's ETFs, but I'll tell you more on that later. So with Fidelity, especially if you have a tax-deferred account using index mutual funds, the first one I'd recommend is the Fidelity 500 Index Fund, ticker FXAIX, which tracks the S&P 500. The coolest thing to look at with this index fund is that it was created in 1988 and has shown statistical results of an average annual return of 10.86%. Besides that, this fund has an expense ratio of 0.015%, which means for every $10,000 you invest in this fund, you're paying $1.50 per year in fees. That's actually really cheap. which, by the way, any fees that you'll see from the expense ratio, they're not going to be taken all at once at the beginning of the year. It's just going to be throughout the time of you owning the actual fund. On top of that, FXAIX over the past 10 years has achieved a 12.68% annual return, which some of the top companies from this fund consist of Microsoft at 7%, Apple at 6%, Nvidia at 6%, and so on. Trying to get this kind of return from investing into singular companies that you think can do extremely well for you and outbeat the S&P 500 is actually really difficult, and I personally don't recommend it, and neither does Warren Buffett, who says to have 90% in an S&P 500 index fund. And he even mentions if you were to pick one to actually use Vanguard's. So when it comes to index funds, a good measure I like to look at when it comes to comparing between one or the other is the historical performance, and specifically looking at the 10-year and longer. With that said, besides the S&P 500 Index Mutual Fund, another one you may be interested in would be the Fidelity Large Cap Growth Index Fund, FSPGX. This one I've actually seen the best results in my portfolio, and it comes at a 0.035% expense ratio, which is still very low, and since 2016, it's averaged a 17.73% annual return, which the top companies in this fund consist of 11.5% Microsoft, 10.5% Apple, and 10% Nvidia, and you can see the rest. Just be aware that by investing into that fund, 30% of the entire fund is literally 3 companies. But another Fidelity fund that I believe deserves more credit that I really like, maybe it's a diamond in a rough, but that is the Fidelity US Sustainable Index Fund, ticker FITLX. This fund has an expense ratio of 0.11%, and since it was created in 2017, it has averaged an annual return of 14.36%, which its top holdings consist of Microsoft at 10%, Nvidia at 9.5%, and then Google thereafter. Now, as you probably noticed from the 3 I just mentioned, a lot of the investments that are the top holdings are very similar, so just be aware of overlap between the funds. Other ones I'll mention are the Fidelity Total International Fund, FTIHX, that has averaged an annual return of 6.46% since 2016, then the Fidelity Midcap Index Fund, FSMDX, that has averaged a 9.47% annual return over the past 10 years, and since 2011, it's received a 12.11% annual return. After that, there's the Fidelity Small Cap Index Fund, FSSNX, and that over the past 10 years averaged a 7.82% annual return, and since 2011, it was a 10.59% annual return. If you don't want to mess around with getting a small cap, mid cap, and large cap fund, which that's what I do, but if you want to make it simpler, you could just get a total stock market index fund that covers all of them through the ticker FSKAX that over the past 10 years has averaged a return of 12.03%. Now, a unique thing if you're investing on Fidelity is that you can actually get their Fidelity Zero Fee Index Funds, where one of the options you could get would be the Fidelity Zero Large Cap Index Fund, FNILX, and you can also see their Extended Market Index Fund, Total Stock Market Index Fund, and International Index Fund that are all zero fees. I made a complete video on this, and what I've noticed after all the research is that for the most part, they have pretty similar results. Now, I'm also a big fan of Fidelity's index mutual funds because they are some of the lowest in the industry, and like Vanguard, you need $3,000 minimum to invest. Now, there is one ETF on Fidelity that I think is underrated that I'm now keeping an eye on the radar for, and that is the Fidelity High Dividend Yield ETF, ticker FDV, that has an expense ratio of 0.15%, but since it was created in 2016, it has averaged a 12.4% annual return, where over the past 5 years, it's been a 14.61% annual return. Not just that, but if you are looking for a dividend, you can also get a 3.13% yield through this fund, which I'll cover a bit more on later in this video. So that about wraps up the Fidelity Index Funds. If you have any other favorites, I'd love to hear your thoughts so I can research more and learn more about them, so put them in the comment section below. And I will mention, I've made many other videos relevant to Fidelity content and even investing as a whole, so if you want to check out, I'll leave relevant videos linked in the description below for you. I think you could really benefit from them. And don't forget, if you like it, subscribe. So from there, let's now go over Vanguard's index funds. Now, of the 3 brokerage firms, I would say Vanguard is at the top when it comes to both ETFs and index mutual funds that they offer. For starters, their popular S&P 500 index mutual fund is VFIAX, which comes at a 0.04% expense ratio, and over the past 10 years has achieved a 12.65% annual return. And if you click right here, you can actually get converted to their ETF version, which is the ticker VOO, where there's an expense ratio of 0.05%, and over the past 10 years has achieved a 12.66% return. So they're obviously both similar. But from there, let's say you're looking for a small cap fund. Through Vanguard, you could look at the ETF VB, which has an expense ratio of 0.05%, and over the last 10 years achieved an 8.76% return, where you can see with one simple click, you can get converted to their mutual fund version, where for their small cap, it is VSMAX. That has an expense ratio of 0.05%, and over the past 10 years, it has achieved an annual return of 8.76%. From there, looking at the mid-cap ETF, ticker VO, it has an expense ratio of 0.04%, and over the past 10 years, it's achieved a 9.5% annual return. If you click on the mutual fund version, it is VIMAX at a 0.05% expense ratio and 9.49% annual return, which they're all pretty much similar. To be honest, the difference between ETFs and mutual funds, for the most part, I would just go with ETFs. But if you are in a tax advantage account where you find value from potentially doing certain automatic transfers, reinvesting the dividends a certain way, which is what you can get on Fidelity with unique features. But if not, I would just recommend the ETFs because it's much simpler. But like I said, I do use the index mutual funds in my Roth IRA. Now, some of the other ones I'd recommend with Vanguard would first off be Vanguard's Infotech ETF, ticker VGT, that has an expense ratio of 0.1%, but over the past 10 years, it has averaged a 20.3% annual return, which is just crazy. And if you're curious, the mutual fund version is VITAX. Another popular option that you may be interested in is the stock market ETF, ticker VTI, that covers all small, mid, and large cap together, and the expense ratio is 0.03% and has achieved a 12.05% annual return in the past 10 years. Which the mutual fund version for this is famously known as VTSAX. Now, if you want an international fund, you could look at their ETF that is VXUS, that has an expense ratio of 0.08%, and over the past 10 years has averaged a 4.32%, where their mutual fund version is VTIAX. Then one of my favorites that I believe is potentially the diamond in the rough for Vanguard would be their consumer discretionary ETF that has an expense ratio of 0.1%, and in the past 10 years, it's achieved a 12.54% annual return, which the mutual fund version for this is VCDAX. The reason I really like this one is because it's not filled with a bunch of tech companies that the S&P 500 and total stock market pretty much are, and so it allows you to have much more diversification, and yet it still gets you really good returns. Now, there's obviously many more Vanguard funds that you could use, so if you have any personal favorites that you'd like me or anybody else to look into, put them in the comment section below. With that said, let's move on to the last one, that is Charles Schwab's Index Funds. Now, there are some good ETFs that they provide here as well, but to get straight to it, going over the small cap index fund, their mutual fund version is SWSSX. It has an expense ratio of 0.04%, which is cheap and has approximately 2,000 small cap US stocks, and over the past 10 years has achieved a 7.72%, which if you are curious, the ETF version for this is going to be the Schwab US Small Cap ETF, ticker SCHA. From there, the mid cap index fund would be the ticker SWMCX with an expense ratio of 0.04%. It tracks the mid cap equities in the US, and over the past 5 years, it's averaged 11.04%. Since 2017, it's averaged a 9.05%, and the ETF version for this would be the ticker of SCHM. Now that leads us into a large cap fund, which is the S&P 500, and for Charles Schwab, their index mutual fund is the ticker of SWPPX that has an expense ratio of 0.02%, and over the past 10 years has achieved a 12.63% annual return. And if you're curious, the ETF version for this has the ticker of SCHX. And after that, we have a nice large cap growth index fund that is SWLGX with a total expense ratio of 0.035% that pretty much tracks a lot of growth large cap stocks, and over the past 5 years has averaged a 19.33% annual return, and since 2017 it has averaged a 16.59% return, where the ETF version for this has the ticker of SCHG. And if you are one interested in international exposure, you could get the SWISX Index Mutual Fund with a total expense ratio of 0.06% that invests into large cap companies across 21 developed markets, and over the past 10 years has achieved a 4.69%. So like I said, if you are actually investing on Charles Schwab's platform in a retirement account, you may be interested in using their index mutual funds, but you may also want to use their ETFs on other platforms. For example, one of the most popular ETFs that they have that I also invest into is the Schwab US dividend equity ETF, ticker SCHD, that has a total expense ratio of 0.06% and tracks the Dow Jones US Dividend 100 Index, which since 2011 has averaged a 12.92% return, and over the past 10 years, it has averaged a 10.99% return. The unique thing about SCHD is it currently has a 3.81% dividend yield, and these are considered qualified. So now that you know some of the best index funds that you could use among these three brokerage firms, the first one's going to be about dividend investing, and there's two options that you could really look at here, with the first one being Fidelity's ETF FDVV, that over the past 5 years has averaged an annual return of 14.61%, that it actually has outperformed the SCHD fund that has achieved a 13.37% annual return over the past 5 years. But the decision between this Fidelity fund and Schwab's popular SCHD can't be just because of that, because FDVV also has a 35% overlap with the S&P 500 index fund, where SCHD has an 8% overlap. All that means is that FDVV has more of an overlap when SCHD has a little bit more diversification. And to be specific, that's because FDVV has more of the growth stocks like Microsoft, Nvidia, and Apple that are more similar to the S&P 500. Another comparison between the two is the fact that SCHD has been on the market much longer, so you have at least 10 years of historical data that you could use for a comparison, where FDVV does not. Now, the reason I'm even comparing the two is because SCHD is one I've been mentioning on my channel and is a popular one I've been investing in, but I definitely am keeping an eye on the radar for this Fidelity ETF. For more of a comparison, FDVV has a 30-day SEC yield of 2.95%, where SCHD's is 3.9%, where if you're looking solely for dividend income, SCHD would be the better way to go. If you have any additions you want to add to the topic of this debate, I'd really like to hear your thoughts in the comment section below. But with that said, let's now go over the rest of my favorite ones, and they're actually going to be Vanguard's ETFs. For example, the ones I actually own consist of Vanguard's Small Cap ETF VB, then the Vanguard's Mid Cap ETF VO, the S&P 500 ticker VOO, or if you wanted to make things easier, you could get the ETF VTI that covers all three of those funds, but I actually like to have them separate. From there, I like the Vanguard's Infotech ticker VGT, Vanguard's Materials Index ETF VAW, that I also believe is a diamond in the rough if you want to do more research on that. And then there's Vanguard's Consumer Discretionary ETF VCR. If you want to see more content similar to this, I'll leave relevant videos in the description below that I think you could really benefit from. Which, while you're at it, don't forget to check out my free learning guides that I've created on Investing 101, 3 fund portfolios, savings accounts, or even my Chase credit card review. And as always, don't forget to hit the like, subscribe, and notifications button for future content like this.